Welcome to the help desk. Again, I'm back. Unfortunately and fortunately at the same time. I'm here with Hunter again to go through and figure out a couple of items. How are you doing today?
I'm doing good, man. Thanks for having me on.
So
I'm excited to be here. We're talking about some fun topics today, talking about inflation.
We got inflation. We got a few different things that are going to go all over the board. We're going to see how it kind of rolls and go from there.
You know, it's funny. My notes here want me to talk about, picture this. It's 2056 and gas is $10.94 a gallon, but we're getting pretty close to that now. I went up to Burlington yesterday in the truck and I had to fill up. I was picking up a new trailer and diesel, and I get up there and the pump cuts off at $100. So swipe my card. Trunk was like empty. Swipe my card, $100. Okay. Swipe my card again, $100. Swipe my card a third time. $42.
God.
$242 to fill this thing up. And I was just sitting there, I wasn't laughing because it's a lot of money, but it's just like, it's so crazy how fast things can change.
Oh, yeah.
And it's like, we talked about the price of eggs is ridiculous and all this stuff. Well, eggs have come down, but everything else seems like it's just gone up.
What blew my mind is a kind of a side note on this stuff before we jump into this topic. We had those big snowstorms the past about a month ago or so. I went in the grocery store expecting there to be no eggs and milk. Mm-hmm. There's no vegetables.
Really?
Yeah. A mound of onions are gone. Dude, people's priorities are wild. But
it's crazy because I guess like it's like a slow roll into it over the last couple of years, like since COVID really.
Yeah.
And we've just seen it increase and increase and increase. And it's like, even when I get my coffee this morning, I got a black coffee, iced black coffee, no cream, no sugar, iced Americano. Yep. That's what I get almost every morning. Typically I make it at my house. I didn't have time this morning to ice it, so I just stopped at the coffee shop, grabbed one. It was like $6.
Yeah. So that kind of rolls us into the topic here. Like we kind of it's a little hint. We do have a crazy little thing here, a picture of me and thing. But you know what? End of the day, inflation's getting ridiculous. Yeah. Right. It's constantly going up. Right now in March, it's 3.3% is what we're doing over a year.
Yeah.
If that continues in that direction, we're going to be looking at insane prices. Like rent going from currently the median graphic that we have up here. This is all just median numbers of the United States is $1,600 right now for rent, around there. In 2056, and the 3.3% increase that we've been typically seeing, it's going up to $4,400.
That's just crazy.
That's insane. Yeah. That's a lot of money.
We've seen it. Like, I remember when I graduated college, I moved in this little area called Waverly. It was a very nice little suburb outside of Charlotte. It was brand new. It had just opened. I literally graduated, and 4 years ago when I was in high school, it was farmland. And then I moved back, and they've built this whole little, like, I don't even know what you'd call it. It was like a little, like, shopping area with apartments and restaurants and all of it. And it was like a walkable area, Whole Foods. Like, it was so nice. I got a 2-bedroom apartment for like $1,500 a month in a brand new place. That same apartment now is like $3,500. Yeah. It's crazy.
Yeah. We look at South End. It's like here in Charlotte, South End used to be warehouses and used to not be great, right?
I was looking, there's a new building called the Vivian. Have you seen that one?
Yes. Yeah.
So I was looking there, like a studio, 500 square feet starts at like $2,500.
Yeah, it's crazy. And like some of them are insane.
Top of the line, 1,400 square foot, which does not sound that big when you really think about it. $16,000 a month.
Yeah. It's insane. Like the prices have gone up so much, especially like here, a lot of these small businesses and stuff that were down here, all these little family ran things are closing because the property value and the tax value of the land is skyrocketed out of proportions for them, and it's really hitting them. And then it's like with inflation, it's like it's only going up more.
Yeah,
right.
No, it's crazy because you have it's kind of a perfect storm with tariffs and everything else going on.
Yeah,
and it's just all the uncertainty in the world with what's going on in Iran right now and other places. We have. China and Taiwan. We have all these things that could just pop off at any moment. You never know what's going to happen. Ukraine and Russia. And it just, unfortunately, all of those things contribute to what we're talking about today.
Because it's like, another thing was like, we were talking about the pricing, is like the median home price went up. It went from like 400,000 and it's expected in 30 years to be 1 million.
Yeah. It's crazy.
For a house. Granted, there's houses that are like that already.
Yeah, no, they totally are. I think about my first home. I bought it at 268 in Indian Trail. And I sold it a year later. Now, keep in mind, that was COVID.
Yeah.
I sold it like a year and a half later for like, I don't know, $335 or something. And it's like, that's crazy.
Yes,
like,
I agree.
That's crazy how much money I made in less than a year and a half.
Yep.
And now that same home is worth way more than that. And I wish I would have kept it. That's what it is. You learn.
When I sold my house, I built my house for 220, I think, and ended up selling it for about 350, 360 during like, the markets, and it was great. But now it's worth 400 something. And it's like, God, I kind of wish I held that one. Like that would have been a nice little asset to hold on to.
It's crazy because we've talked about this on previous shows, but like, should I rent? Should I buy? I mean, these.
Yeah, and I think it just fits whatever lifestyle you want, right?
Totally
like,
does.
there's definitely pros and cons for both sides.
There totally is, but no one could have expected what happened the last couple of years, and it was a fluke event. Like we kind of had a recession during COVID. They pumped so much money into the economy, it fixed it.
Yeah.
But that's why we're seeing a lot of the problems we're seeing now is because of those events.
If we could toss that graphic up one more time real quick for the increases, there's one other stat I want to pop on that one.
Yeah.
Was the average cost for a new car.
Yeah.
Going from 49,000, which is already crazy right now, to go up to 130,000. Yeah. That's wild. And that's cheaper car. That's not even talking we're going into Lenovo or Porsche or anything, right? We were talking your standard style cars.
Yeah.
That's an insane increase.
It's crazy when you think about it too, because the average car price in this country now is like $700 a month or more. And, that's more than most people take home in a week.
Yes.
It's a lot of money. Like, and people are just happily signing up for these car loans now. And that's scary.
And it's like and people have these myths in their head too, right? So it's like one of the biggest myths is like, I'll just earn more later.
Yeah.
Right. And it's like, I don't think that fixes anything, right? Yeah. You're just you're waiting. You're not helping yourself. You're not increasing your money. So as inflation goes, you're staying where you're at. So you end up losing more because you're paying more, but you're not making more.
Well, I think people too, like you tend to think, oh, well, in 2056, like, the median home price could be $1 million, but my income's also going to go up. And like, yes, it will, but like we've been seeing over time, it has not followed what the actual costs of everything else are. I mean, college is a great example. You could have gone to college back in the 80s for like 10 grand.
Yeah.
Maybe less.
Yeah.
And it's like, it's crazy because now you have people graduating with $100,000 in student loan debt for
if not more,
like,
depending on what you're going for.
Yeah, it's absolutely insane. So like inflation and income are not keeping up, or inflation's way outpacing what people's income is rising.
Yeah. And it's like, it's crazy. It's like people also have the concept of cash is safe.
Yeah,
and yes, cash is safe to an extent, but there's no guarantee that dollar bill will stay and hold that value, right?
No. And there's, you have currency risk, obviously. Like that's a very real thing. You have currency that doesn't get devalued and everything else. And it's like, that's one of the scariest things I think about is, right now, the dollar is the world, what is it called?
World currency.
Yeah, the world currency. And if that was to ever change, it could collapse the U.S. dollar. And it very well could happen.
Which there is the fear right now, like some changes are happening where in Europe with the Ukrainian war, with the Iranian thing that's going on, the conflicts, that they're starting to change some of their infrastructure, some of their value points. And there's been a lot of talks and push that they may move away from the U.S. dollar. Yeah, and if that happens, it's going to tank us hard, right?
Yeah, it's going to hurt.
So it's like assets are going to place so much more of a value to that level because your asset, regardless of the dollar value goes down, your asset will still hold more value.
Well, like, and I think about it, like, I still love cash. I still use cash. I still keep it in my wallet. I still keep it in my safe. Like, it makes me feel better when I go to bed at night that I know I have cash on hand at all times. I just like it. Makes me feel good. But I know it's losing money.
What's your thought on like the gold, silver, and because I know some people have been moving into that direction too.
I still have some. It's I think it's important. I don't think it's the
end of all, make all.
Yeah,
kind of thing,
exactly. But I still have some. Obviously, if you would have had gold, before COVID, like
you'd be real nice.
Yeah,
you'd be real nice.
Yeah, it's great. Like people who have it, it's gone up a ton.
Yeah,
but it doesn't always go up. It depends on the market we're in, whether gold goes up or down. So you have to think about those things. But that's why being diversified is so important.
Yep.
So it's like for me, like I have a little bit of cash, got a little bit of gold. I've got money in the market, got money in savings. I've got money all over the place on purpose because when one market is going up, another one could be going down.
Yeah.
So as long as you're diversified, I think you're okay. But it's tough when these prices are rising the way that they are. Yeah. Like, I some of this yesterday, $242. I'm not the only guy with a big diesel truck that uses it, pretty often to tow and things like that and gets 12 miles to the gallon.
Yeah.
I'm not the only person doing that.
Well, for sure. But there's a lot of people who like cross country. Like there's the
Yeah.
semis, right?
Yeah,
The semi
exactly.
cost is probably insane.
It's absolutely astronomical right now. But I was thinking about it. I'm like, not everybody can afford to fill their truck up for $240. Like that's crazy.
yeah.
And even just regular cars now. I mean, gas is over like what, 380 something, and then premium's like 5.
Yeah,
it's just
it's only going up.
And when you think about that, like diesel price especially is also one of the reasons we're seeing, higher prices at the grocery store, higher prices when you go to Best Buy. Like you got the tariffs, and then you also have the cost of diesel to get things to where it needs to be.
Yeah.
And it's scary.
The one thing we need to find ways to be able to handle inflation, right?
Yeah.
And there are some steps that can help you get to that spot, which I think the first one really is just run your own budget, right?
Yeah.
Track your values, track where you're at, and try to beat that increase, right? Try to make it sure that you're over that 3.3 increase, whether it's raises a job, whether it's additional income, whether it's appreciating assets, right?
Yeah.
You always want to try to stay ahead of it.
Yeah. I mean, it sounds dumb when you think about it because everybody's like, oh, just cancel your Netflix subscription, save some money there. But, at the end of the day, like, I look at how much money of mine goes out on a regular basis over a week on just kind of dumb things that I don't necessarily need. Netflix is one of them.
Yeah.
And I've got Prime and I've got Hulu and
it all adds up.
I'm getting my coffee every morning. And it's hundreds of dollars a month going out. And I don't want to sacrifice things in my life that make me happy. I think you have to have things in your life that
you enjoy it, right?
You have to have things in your life that you enjoy, or it's just what's the point?
Yeah.
But I do think there is some level of sensibility that you can have to start giving yourself your own hedge against inflation so you can start putting money where it needs to go so you can start beating inflation.
Yeah. Makes sense. And then another thing that's on that is next step you can work on is housing hedge, right?
Yeah.
So basically, if you have a house, try to pay it off sooner so then you have that asset and you have that value.
So,
in it, right?
that's a big one, and people don't realize that. And you're like, oh, pay it off early. Like, I don't have the money to pay this $300,000 house off. I get it. But, most of your mortgage companies, they'll have a calculator on their website, and you can see if I pay an extra $2 a month, what happens.
Yeah.
And it'll tell you.
It adds up
it's
quick.
Crazy. Go put $10 a month extra to your mortgage, see what it does.
Yeah.
You'll knock 10 years off your mortgage, 5 years. It's like a crazy number. And you have these calculators that will actually show you. And it's pretty cool. I mean, it's crazy what
it's
you
also
can do.
nice because it also opens up the door that if you're in a bad case scenario we talked about this before, refinancing into stuff, right? So if you have less owed on your house, you can get more money back, potentially at good percentages, depending on the time of the year and stuff. But it is a portion that you can get money if the situation arises that you need it, right? Another one is transportation smart, right?
Yeah.
So basically, be smart on how you're doing your transportation, right? I mean, if you have public transportation, some of the ways, like you live in the city, you can take light rails, you can electric bikes, right?
Yeah, I mean, all the guys here, I mean, there's 15 people working here, and there's maybe 3 cars in the parking lot. Everybody rides scooters here.
Yes.
Which I love. I think it's super cool. And if you live in the city, like, it's awesome. Like, it's a great way to get around.
Yeah, and it's like you don't have to have the brand new fancy new cars too, right? You can use cars is fine. Electric cars is a big one that you can use that saves a decent amount of money, right? So there's a lot of different options for it.
No, there totally is. And you have to think about too, like, it's not just the car payment that matters. It's what's the insurance look like? How much are you going to be spending in gas? What does maintenance look like? I mean, you have to think about these things.
The insurance thing, one of the small things I've learned is go for one of the ones that gives you a little, like, those little pucks or that tracks your driving habits, right?
Yes,
because if you drive, fine.
I can't use those.
But it's
my
like,
insurance would be through the roof.
For me, it's like I went to State Farm and I was paying $130 a month on the Volvo, and it was like it hurt. It was not a cheap insurance, especially not driving a lot.
Yeah.
But then I did that, and I just recently got my renewal on it, and it's halved.
Yeah.
And it's like that. That's real nice, right?
Companies like Tesla, they have their own insurance now.
Yeah.
Tesla offers insurance in a lot of states, and it's based on how you drive. It's really cool.
Then the next one, it kind of fits into the first one, which is the invest to beat the 3.3, right? So it kind of fits in the first step, where once you have that plan, now start investing to ensure you beat it, right?
Yeah.
So you want to get into the markets, you want to be able to grow your assets, you want to get to that spot. And then the last one is just your income.
And we talked about this.
You want to be able to get your spot where you get up, you make more. So it's like, stop going out and eat every day. Yeah. Learn to cook. Yep. It's not the hardest thing in the world.
Well, and, we talked about, cutting the subscription costs and all the stuff, just find an extra $100. Find an extra $50. to get on Robinhood and set it up every month to just repeatedly buy
Yeah.
the same thing. Get it buying Nvidia or Tesla or something. That's not stock advice, but like just find something.
Yes,
And
I agree.
The
It's one of
compounding
those.
interest helps so much.
I agree. It's one of those that you need to build your money to be able to get past it, right? Now, another thing that we need to pay attention to is your insurances, right? So,
Yeah.
insurance, I think, is a thing that falls underneath the radar for a lot of people.
It does. The younger you are, I'm especially guilty of this, just because I don't. I have a girlfriend, but I don't have kids.
Yeah.
Like all my stuff's insured, but like I don't really need a term policy. But as I'm getting older, I'm starting to think about it more because I do want to have kids, and as I continue to get older, it's only going to get more expensive.
Yes.
So I think about that, and like my health insurance, got to think about that, and like I don't really get sick. I take care of myself.
One thing that needs to be people need to pay attention to is the biggest pivotal point for insurance is don't wait until after you have something.
Yeah.
Because the problem that happens, and this has happened to a few people I've known, is the moment you get diagnosed with something or you're in the process of getting figured out of an issue, the moment there's a realization that there is something wrong with you, the companies will skyrocket your insurance tonight. But if you have it prior, they can't do that, right? They have to hold the policy you signed up for initially.
Yep.
So
and you have to think about these things, like, so for me, like I have good health insurance. I pay for it with my company. I'm very thankful for that, but I have great insurance and, it takes care of, everything for me. But, thankfully, I take care of myself. So my goal is to get to a point in life where when I'm in my 70s, I'm still enjoying life. And I went to this event last weekend and, I think this is, I would call it a form of insurance. You're insuring yourself almost on a personal level. But I went to this event. And it was a car show, and we were racing cars. And they had a bunch of NASCAR legends there. Bobby Labonte, Tommy Kendall, Joey Logano was there, some awesome people. Well, one of them was Mark Martin. He's like 73 years old. And seeing him get in this car, drive it around, he drove it like he was 20 years old. And I was sitting there thinking, I'm like, dang, like I know some people that are 73 who can't do that. They wouldn't be able to get down into the car. Their legs won't let them. Their eyes won't let them, this and that. But I was trying to figure out, what he had done. And then when you get up close and you look at him, you realize this dude's shredded. Like he's ripped. Like he makes me look small. Like he's huge. And he's not a big guy, but he's shredded. And I think it's so important that you take care of your body now, because I've seen it firsthand with my dad. I've got one kidney now. And it wasn't his fault. He was on some medication that killed a kidney. But
that's sometimes the problem with medications. It helps one thing but kills another thing, right?
Yeah, so you have to think about these things when you're young, and I think now it's so important to take care of yourself.
Yes, I agree. And a lot of health insurance companies, they give you preventive care.
Yeah.
So it's like you go into doctors just to get a checkup, and it costs you nothing.
Yeah.
Right. So it's like a lot of insurances cover that. So I highly recommend anyone to go down that and get the check, right? And then it's like you can beat something before it becomes a problem.
Yeah, and when you do things like that, it makes things like life insurance and disability and all the other things so much cheaper in the long run. Like when you're a non-smoker, guess what? Your insurance is going to be cheaper.
Yep.
And I see that on a daily basis with our clients when we're doing things like Medicare and this and that and just looking at life insurance. As soon as you add in there a smoker,
yep.
It skyrockets things.
With life insurance, there's a lot of things you got to pay attention to with that as well. Like you need to be able to know if you pass away, does what you're giving off to your spouse or your significant other, is it enough to help them? Yeah. Right? You don't want to be paying for something that gives half what's needed to handle.
Life insurance, it depends on your age. Yeah. At my age, if I had kids right now, the number I would be looking for is probably 20 to 30 times my annual income is what I would want in life insurance, because I know that protects my kids for about 20 to 30 years. I'd be probably edging more on the 30-year side, just to, leave my kids something a little extra and make sure my wife's taken care of, et cetera, et cetera. But because I don't have kids right now, maybe 10 to 15. So,
and I think it's one of those, you just need to kind of sit down and see how much you would need, right? Yeah. And then kind of just value with it. Yeah. Because I do agree, you don't want to do something significantly crazy that you're paying a lot for that you may not get something.
And
that
shop
far.
around too. Like it's super important to shop around. There's so many apps nowadays you can download and find life insurance and term and all these different things. So life insurance is a great tool, but you do have to be careful. Term life is definitely more important and more affordable for people our age. Whereas whole life, you're starting to, you're in your, late 50s, 60s. The kids are out of the house. You don't have, too much to take care of aside for, maybe you're thinking about your spouse and making sure the house is paid off if you were to go and something happened, et cetera, et cetera.
Another big one is the disability insurance too. Disability insurance is one of those that like I get some people may not go for, but one thing that you always need to keep in mind is most employers will only cover like 60% of your income when
you
it
have to
comes
think
to
about
it.
it's a huge gap.
Right. And so it's also not an extended period. It's normally only for like a few months, up to 6 months or so, right? And then after that, they just stop.
Well, and you have to think about it too. If you're on disability, like, I had a buddy who went on it. He hurt his back. He didn't need any kind of special care or anything. He was back at work in a few months, but he did hurt his back really bad, and he had disability through his company, so it helped.
Yeah.
But if you were to get in a car accident or something and you had a catastrophic disability, something you need someone to come into your home and help take care of you, if you're only getting 60% of what you're currently making, is that going to cover the lifestyle you had? Not saying you're going to be going out and doing all these things potentially, but arguably you're going to be spending more money because you may have to have somebody come take care of you.
So and
you
have to think medical costs in general are just so
exactly.
high, right? So it's like there's so many different levels to that it could help you a lot in the long run to be able to help you save money. Same thing like umbrella insurance, right? Umbrella insurance can really sit and cover for a lot of things.
You see, I have an umbrella policy. Most people my age, if don't even have them or know what they are so cheap and it is so important. People don't realize it. If somebody, say you own a home and somebody comes onto your property, so like you come to my parents' place, they've got a Belgian Malinois. We call him a Maligator because he just like would tear you up if you were not supposed to be in that house. Like if you weren't supposed to be there, he would know, and he is going to,
defend the home,
fix the problem.
Yeah.
Is probably the best way to put that. But I think about like my two dogs. I've got two little huskies. They're the best dogs ever. They've never bitten anyone. They've never tried, but something could happen.
Correct.
My parents, they live on 50 acres in the middle of nowhere. No one's coming onto their property. I live in a neighborhood. There's sidewalks. There's kids that are walking and stuff. And could it happen that a kid's walking down the sidewalk and steps on one of my pup's toes on accident and they bite out of pain?
Yeah,
totally could happen. And you've got to make sure you're protected in those cases because people do sue for anything and everything now. It's crazy.
Especially if you have any type of net worth or value that people see.
Yeah, exactly.
Unfortunately, with today's society and some things, it's like some people will use that to their advantage, right? So if your dog bites them, you may have the person that's like understands the situation. Oh, I stepped in the dog's paw. That's my bad. Cool, right? Then you have other people that will freak out on the whole situation, right? And that's where umbrella becomes so helpful. It covers and helps cover like the lawsuits, the cost of the lawyers to get that handled.
Well,
right?
I got in a car accident a couple of years ago. And this was like just infuriating the way our system works in this country, and every state's different. But I was making a left turn and I got T-boned. And guy came around a corner, couldn't see him. I was already basically through my turn at this point, but it's 25 mile an hour zone. Dude hits me going like 50.
Oof.
Like just absolutely just destroyed our rental car that we were in. And all of us were okay. Everyone's completely fine. He gets out, he's apologizing, the whole 9 yards. I'm so sorry. Tells the police officers I'm totally fine. No, nothing's wrong. And police come, we both get a ticket. Mine got dismissed. I can't even remember what it was for, to be honest with you, but it was his insurance covered it, and then the rest of his, I guess he didn't have enough insurance. So
because it only goes up to a certain amount, right?
So then the rest goes on to my insurance. So my insurance rate skyrockets now because I have a claim on there. Well, like 6 months after this has happened, we didn't even go, no one went to the hospital. 6 months after this happened, I get a letter from Geico or who I was with saying that I'm being sued for like, $25,000 to cover this guy's medical stuff. And, that's kind of a scary letter to get. But, I've got Geico at the time and they covered the whole thing. They handled it. But it just goes to show you, like, people do this stuff all the time. Like, they go talk to a lawyer, like, oh, yeah, man, you can
easily get
like, this guy's got a huge limit. Like, and they try and max it out. They go for the biggest amount they can possibly get. It happens all the time.
It happened to my brother years ago. My brother got into an accident where he literally just pretty much tapped the bumper of a a car. It wasn't even like a big accident.
Yeah.
And the lady was like freaking out, went to the hospital, neck injuries, was paying all this stuff for months on this thing, and eventually got to the point that the court system was like, this is ridiculous.
Yeah.
And it's just the end of the day with it. It's just you got to be careful with it, and you got to have something that can help you cover those fees because they will add up real quick.
And two, while we're talking about insurance, like the car accident stuff, like I have been rear-ended more times than I can count. Hopefully, never again. And I think about it because a couple of them just weren't that bad. Very small, fender bender, whatever.
Yeah.
And the person gets out, they come over, we're swapping info, and they're like, do you want me to call the police? I'm like, absolutely not. And I'm not saying do this for everything, but like if you're just, going through the Harris Teeter parking lot and somebody taps you at 3 miles an hour, weigh your options out first. Like, look at the damage. Is it something that could be covered?
Yeah.
With a couple $100?
Always make sure you get their insurance information,
of course,
their information right, because you don't want to just play the game of give me your number and then never tear them again.
It happened to Seth a few months ago. Somebody hit his car in a parking garage. They dented the fender on his RX-7. And Seth was calling the police and calling like, Seth, don't you dare. And I drove over there and we looked at it, and I called a paintless dent repair guy, had it picked up on a flatbed, taken over to him, and $300 later, plus the $200 for the tow, it was brand new again. And the guy that hit it just gave us cash. And, two things happen when you do that. One, the insurance rate doesn't go up for filing a claim.
Yeah.
Now, if it's on their policy, it shouldn't affect you if it was their fault. If it goes on your policy, if it's an uninsured driver, whatever, it's going to affect your rate. The second thing was the car didn't lose any value. The moment you file a claim, your car is going to get devalued.
Yep.
And you have to think about those things. If you get in a car accident, just know that if you file that claim, your rate could go up. The car's going to lose value. So think about, can you get it fixed? Now, if you can't get it fixed, you're for cheap and you got to go get it done, do it. File a diminished value claim with your insurance company. They will take care of it. You'll get a big check back more than likely. And there's just things. There's so much with insurance.
So pretty much what you're saying is with insurance, just be mindful of how you use it, right?
And be mindful what you say to these companies.
Yeah,
because their entire industry is based on how much they can save.
Yeah,
their goal is to not pay out.
And I also think it's one of those you also want to shop around, right? Because they're always being competitive to each other. Yeah. So it's like you always want you to every few years. Now you don't want to do it every year because they will start trying to increase you because you're hopscotching between insurance companies. Well, but every few years to go through and just be like, hey, I'm paying this much. What can you do for me to match this kind of thing, right? Yeah. And you can really play the game of keeping your insurance money down.
Yeah, no, you totally can. I mean, I've swapped multiple times. I've got a great agent who helps me shop around every year, and I'm with Haggerty and a few other companies. I've got like 3 different insurance policies for cars now, but
the other options is like bundling stuff, right? So it's like a lot of them bundle. You see them all the time for like Geico with the motorcycle. I don't know why it's always the motorcycle insurance. It's always the one they advertise, the bundle all the time. But you could home insurance, car insurance,
umbrella,
all that can get in,
yards,
and
renters.
It's like you get percentage reductions and costs with it, right? There's also companies out there that like I went through for a while where they kind of handle it all for you. Yeah. You call them, you'd be like, hey, I want to do this to cover A, B, C, D. Yeah. And they will go do all the shopping for you. They'll get all the rates and they'll come back with you and be like, here is 4 options, right? Now, you will, in my experience, pay a little bit more on the monthly for it purely because you're going through them. However, they will basically handle a lot of the claims for you. They'll handle all the stuff in between, right? So it's like you pay more for additional services, but sometimes it's not worth it if you're not planning on having a situation user, right? So you got to play what is the best strategy for you.
Yeah, and then the last thing we're going to talk about is the long-term care insurance, and this one always bothers me a little bit because I think traditional long-term care insurance is broken. And the only reason I say that, like everybody should have some form of plan for long-term care. If you talk to my dad, his plan would be to have someone come take care of him in his home. I grew up in this industry. So I've been to a lot of assisted care facilities, things like that, these retirement homes, and they try to make them look so nice. I don't care how nice it is. Every time I go there, it's the exact same, and it just feels depressing. And my dad's the same way, but neither of us will ever go to one of those. Yeah, we have made it a goal. We will never set foot in one of those for our personal self. Yeah, and I think it's important to think about these things now because you don't want to go to one of those. And, traditional long-term care insurance is great for a lot of people, but it's also very broken in a sense of you pay for it every year. And, they give you, let's just say I'm just going to throw out a generic number and probably not this low, but let's just say it's $30 a month when you're younger, paying for this policy. And you don't use it, you don't use it, you don't use it. And every year, the policy goes up a little bit. You're not using it yet, but the cost goes up a little bit. You're getting older. So they're just insuring themselves by raising the cost. And you finally get to a point where it's gone up to this level that you can't afford anymore. So you call the lady or the guy at this place and you say, hey, I can't afford this insurance anymore. And they say, oh my gosh, that's horrible. Can you afford what you paid last year?
Yeah.
You say, yeah, I could do that. I mean, it was tough. I was eating cat food for dinner, but I can afford it. And they say, great. We're just going to lower what we pay you if you ever need it now. And in my mind, that scenario doesn't work.
Yeah.
And then what's your other option? Cancel it? You just paid in how much money?
Yeah.
Just to cancel it and get nothing? So I think you have to look at alternative options for long-term care insurance. Never just take the first one.
Okay. Now, I'm going to ask you the question. I have $500 to invest. What should I do with it?
I think we talked about this a little bit last week. That really, if you have $500 to invest, I'm just going to go ahead and assume you already have your savings account set up with an emergency fund.
Assume I have, I'm in a stable spot where I know what I'm making.
You got relatively
debt
low
in a
debt.
handle spot. So now I am guaranteed I have this amount sitting aside to actually start working.
So there's multiple things here. Do you have a 401k with a company match? It's free money.
That's true. Yeah.
Probably take it. Are you making, below the threshold to where you can still contribute to a Roth IRA? Tax-free income later in retirement. It's very important. So, for me personally, I'm just going to assume I've already got the 401k match. I'm going to jump into the Roth.
Okay.
I would jump into a Roth. I like things like Robinhood. I've used them all. Fidelity, Charles Schwab, Vanguard. I've used all of the E-Trade.
Yeah.
I love them. They're great. Robinhood is the easiest. I don't know why. I just like it. I think
the big thing with Robinhood is like it has the mobile use friendly, right?
Yeah.
They made it so like anyone can just pick up their phone and use it. And it's very beneficial to run that, right? It's super easy. It's very manageable.
Yeah.
They recently just changed the rules of day trading to allow people to trade more now.
Yeah.
Well, is that going to be beneficial? Maybe.
I think it is if you have your little fun accounts. Like I have an account with Robinhood that I use for fun. It's not something where I'm trying to get rich. It's not something where I'm trying to count on it for my retirement. I'm just having fun and buying and trading stuff that, I've, educated myself on. It would not be my, be all or end all be all kit, but it's just, my little fun account. So I do like Robinhood a lot. That's my main place I like to throw money like that.
Yeah.
Brokerage account, things like that.
And there's a lot of options you can use for it. Like Fidelity is another big one, like you said. I think a lot of people are familiar with Fidelity purely because majority of company 401ks run through that.
Yeah.
Like when I worked for Spectrum, that was the number one thing we always used for it. They also has had good investment funds and good investment ways, right? So they didn't charge you to do half the things you're doing. You can move cash easy with them. You can move accounts. Same thing with Charles Schwab, which I currently personally use now. They have their setup where everything's interlinked with each other. It's very easy to move things around, handle. They also give you crazy insight. And sometimes I think it's a little too much they give you. Mm-hmm. They to be able to see way too much into the stock markets. It's like if you know more, you can get more out of it.
Yeah. It's fun. Like investing is actually a lot of fun if you learn the basics of it. And it's not hard. Most all of these websites are, they have the educational material on there for you to learn like how to do it in a safe way. Now, listen, there's no guarantee that you're going to go out there and make a ton of money. But over time,
it grows.
The compounding interest is huge. And people don't realize that. You think it's just $100.
Yeah.
But then you do $100 a month and that's $1,200 a year. And after 5 years with that compounding interest, it looks completely different. And you're like, oh my gosh, like I have a sizable amount of money in here, but I would not have had unless I did this.
So what age would you say you should open a Roth account? Because a lot of people think that's like something's like a later time period, right? Some say it's earlier.
Literally the day you turn 18.
Okay.
Why not?
Yeah,
You know, like,
there are, like,
listen,
any-
I was doing little odd jobs when I was 18. You know, I
Yeah.
was, cleaning people's cars. I was mowing lawns. I was doing all the stuff. I got a job at a golf course. I worked in college and during the summers because why not?
Yeah.
Like I wanted to. Like I didn't need to. I feel like a lot of people probably need to. But I was in a place where I was very thankful that my parents supported me through college, and not everybody gets that, but I was really thankful for it. And I want to do the same for my kids, but I still chose to work. I wanted to have a job. I wanted to make some, income for myself. And one of my biggest regrets was not taking every penny of that and throwing it into the market.
So would you say if somebody has like let's say a 401 or a traditional IRA,
Yeah.
would it be beneficial for them to take some of that money, take the hit for pulling it out to put it into a Roth, because there is that tax that's going to be paid on it, right?
It's called Roth conversions. You can do those. They're awesome. We use them all the time at our firm. We use them all the time for people, but it depends on, what your tax situation looks at. We don't want to bump you into a new bracket by, pulling that money out.
Yeah.
So you have to think about those things. So we just want to keep you in the same bracket. If you're in the 15% or whatever it is, like we do a lot of conversions.
Yeah, you don't want to be paying more if you don't need to.
And it's cool because once you've gotten out of the income threshold of which you can contribute to a Roth, you can still do conversions. So I think about my friend Max, who's a doctor now, and he's in a position now where he makes far too much to contribute to a Roth, but he can still do those Roth conversions, which is what he's going to do.
Okay.
He's going to pay that tax hit, which, arguably taxes will go up at some point. We've seen them as high as like 94% in this country. It was a fluke for 1 year, but there was like a 10-year history where taxes were well over 78%. And to think that they couldn't go that high again is crazy, because we were not in $38 trillion worth of debt back in World War II when taxes, I think it was World War II, wasn't it? Maybe, I don't know, when taxes were that high. And I think about that because taxes are going to go up at some point. I don't know when, but they are going to go up. They have to. So I'd rather pay the hit now for, a little bit less money than wait and they go up.
And I believe with Trump's administration, they've implemented some fun policies and some good things. I believe this year they're doing like a tax credit or next couple of years to be able to cover some of that for overage. I think I heard your dad talk about that a few times.
I'm not sure. I haven't kept up with all that. I need to. There's new stuff happening.
There's a tax credit that basically, if you're over the age, I think it's 50, and I could be wrong, be 55. You have to just double check it, dude. Look it up. But if you do a Roth conversion at that point, there is a tax credit because you're over that age that will basically cover the cost of what you would be losing in taxes and all that. Right?
I'll have to look into that.
So it's an easy way you can convert some of your money.
Into that. And the administration has done some cool stuff. Not to get political, but you have the Trump accounts and stuff, and those are really cool. Kids born from I think January 31st, 2025 until December something 2028. Don't quote me on that. But there, you can open a Trump account, and the government will put some money in there for your kids, and you're able to contribute a certain amount of money each year, and it looks really good for newborn babies when you put that money away for them.
It grows later, and it builds up. Yep,
it's setting them up for an awesome future. So,
yeah, I mean, it's like I think you can set yourself up in that same spot with just using your tax brokerage accounts, right? So creating these accounts, opening them, and just putting the money in. And the biggest thing is when you put money into it, your dad says, I think he says all this time, is don't let time affect you. Yeah. Right? You need time in the market.
Yeah. Time in the market's huge.
Make it so they grow. There will be ups and downs.
Yeah. And that's why, I tell people, like, for me, it's Robinhood. Like, I like it. I like being able to just do it from my phone whenever I want. It's just easy. My phone is always on me. So just find that number. Is it $5 a month? Is it 10? Is it 25? Find that one thing you can cut, set it up on an auto pay, let it draft money out of your account each month, each week.
Yeah.
Yeah. If you have it, do it every day. A couple dollars a day. If you got $5, are you like me and you have to have that coffee every single morning? Make it at home.
Yeah. Yeah, but I think there's easy one.
Invest that money.
Coffee, breakfast things, right? There's so many different ways you can save money to help you invest more. Yeah. That I think people are just overlooking. Like I said, the Netflix stuff, right? I bet you there's so many people out there that have either a Netflix or a Disney or any of these subscriptions that never use it. And it just sits there and pulls out of their account every time.
So many.
And so
it's
you can take
insane.
that $10, $15 that you're spending on that and put it into another account, into like
I mean, like
Robinhood
you're a hockey fan, so you know this. Like, unfortunately, our games are almost always blackout games, so like you can't watch them on the ESPN app or with the NHL Pass or whatever it is. You have to have FanDuel, and it's like I think about it, I'm like, dude, that's like $300 a year.
Yeah.
That I'm spending between those two things.
It's annoying, especially for any of any sports games, right? Like soccer was huge on it. Dylan, one of our coworkers here, is massive into all his sports, and apparently, like the soccer league had like 4 different streaming services for the one league.
Yeah,
and
no,
it's like you have to have
crazy.
all 4 to watch the games, and that's
well,
like,
and it's like too, like there's credit cards out there. Like I use my American Express every day, and like part of the benefits of having that card, or it has a digital subscription. What do you call it? Benefit.
okay,
And it pays like $300 some a year.
Yeah.
For digital subscriptions, you just have to make sure you have those things set up. Like,
Yeah.
look at the credit cards you have. There might be some benefits on there. I have one for Uber Eats. I get $15 a month.
just make
Is
sure
it
you
a
pay them
lot?
off as you're paying it through
No,
it, right?
you have to. But
you know.
most people have credit cards and don't even know why they got that specific card.
Yeah.
There's a million credit
Oh
cards.
yeah, for sure.
And most people don't know why they got it. And there's some, cool little things in like, American Express, you can convert your points into a brokerage account. A lot of people
Yep.
don't know that.
And it's one of those like those cards too. So it's like they have the subscriptions, but you have to pay it through that card. Just
Yeah.
make sure you remember that you're doing that.
Yeah.
Because like sometimes those add up. Quickly.
I've got a card that it was like my first credit card. It was some old Capital One card, and I can't even remember the benefit that it has on it. I think it's a digital subscription thing, but I literally do not use that card anymore. I have it set up on auto pay, so it pays the balance on it each month without me even looking. But the only thing that's on it is like one single subscription, just to keep the account open.
Yeah.
That's the only reason. So,
Yep.
well, you want to hop into some questions?
Yeah, we can do some questions.
Yeah.
Okay. So I'll hit you at the top. Our first one here. A lot of people keep saying, "I'll just earn more later." We looked at it a little bit earlier in this episode. Or cash is safe. Why do those mindsets fail most people? And what's one move you can make this month that actually will help you beat that inflation issue?
I think the "I'll just earn more later" works for some people, not all people. It works for like the top 20%, top 10%. I'll earn more later. Great example of that, my buddy Max. He went to college, pre-med, then did med school, then did residency, and he was not investing the way he should have been had he not, like, maybe not how he should have been. He wasn't able to invest because he wasn't making any money.
Yeah.
All he was doing was accumulating debt. And he's in his 30s now, and he's making a crazy amount of money because he's a doctor. He is that top 10%. I'll earn more later. He had a plan to do that.
Yeah.
But you can't be working a 9-to-5 job at Costco or at, the car dealership or wherever it is. And there's nothing wrong with those jobs. Like, I did those jobs. But like when I worked at the golf course, I knew there was a limit to where I was going to go at that job. And I wholeheartedly knew that.
Yeah.
So it wasn't I'll just earn more later at that point in my life. That was where I was. That was my cap. If that
You had a
makes sense.
plan. You had a goal.
Plan. I had a plan. I had a goal. But I think you have to understand that if that's truly what you believe, how are you going to earn more later? Like, truly know that, because it can't just be I'll figure it out later.
Yeah.
That's how you get put into really bad situations, especially with things like credit cards, signing up for that big car payment.
And I do think there is like a difference between that statement is very broad, right? I'll just earn more later. I think you bring a valid point where you can say that in a way, I'm going to earn later because I am doing A, B, C, D, E, F, G to make that happen, right?
Exactly.
Or there's this side where I'm going to earn later because I just don't want to deal with it right now.
Yeah.
Right.
And that's how people get in so much trouble, because they go to the car dealership and they're trying to find that new car, and, they've test drove a couple, and, they went there for a Civic. That was what they were going to get. They were going to buy a Civic. They saw a deal online, $29,995 for a, 1-year-old Civic.
Yeah.
And they figured out, okay, well, I've got $5,000 to put down. I could finance $24,000 over 60 months at a decent interest rate. I can afford this payment. Okay. Like $350 a month, whatever it is. Like that's okay. And when they get to the dealership and they walk onto the showroom, and, the dealer shows them this brand new Honda Accord. Lux pack,
Yeah.
with the nice wheels and the bigger screens and the heated seats and all
All
the
pretty.
stuff.
It looks so good.
And it looks so good, but it's $49.99. And all of a sudden they went from, taking a loan for $24,000, taking a loan for
Yep.
$44,000, and they've doubled that payment. And their mindset is, well, I'll just cut a few things out. I can figure it out. When they get home and they see an ad on their phone for that new coffee machine or, that new Xbox or whatever it is, and, well, I've got a couple thousand left on my credit card I can use.
Yep.
And that mindset is what ruins people. And you have to be so, so careful of it. You
Yes.
have to be so careful. And it's, the whole thing like cash is safe.
I ran through the situation when you talk about cars. I've been through that.
Yeah.
I went in. I honestly, I don't even know why I did it. I went to a Chevrolet dealership and was looking at a couple things, just just browsing to inside. And then there's that great Camaro.
Yeah.
Oh God, the great 2SS Camaro that you're just like,
Yeah.
I can't get the ZL1. That one's way out there, but like that one looks,
Oh yeah.
that looks nice. And ended up buying it.
Yeah.
Loved it for about 2 months.
Yeah.
And then
That
you
payment starts
realize
hurting.
you're paying a lot for that, not only in the car,
Yeah.
but insurance as well, because it is a sports
And
car.
gas.
And in gas. And it was adding up, and you're just like, oh my God, I am in a hole.
Yeah.
Because like the moment I drive it off the lot, it's like drops $30K.
Well, yeah, and it's the opportunity cost too, because that money that you're now spending, even if you can afford it, the money you're spending to keep that car up, to pay for the gas, to pay for the insurance, to make the payment, if you would have invested that money, oh my gosh.
Oh yeah, I agree.
And listen, I am a huge proponent of enjoying life when you're young. I think you have to.
Yeah.
I am a huge proponent of that. I do not want to get to 70 years old and be like, holy cow, now I can finally live.
Yeah.
I saved all this money. I can finally live. I can go buy that 911. I can go buy that Ferrari, whatever it is, but I can't get down into it because my knees hurt. And I'm a huge proponent of enjoying life, but I think you still have to have a level of sensibility and education in what you're doing to not put yourself or your family in a bad place.
Yes.
Go live your life like that your whole life. And then, you get to 70 years old and, you get hit with the, long-term care and you have to go to a facility and you haven't, saved enough money to actually cover that.
Yeah.
And now you're asking your kids for money and all these things. It's a horrible way to live.
And that's what that taught me was like, it not only did teach me to not be swayed by the looking pretty thing, but it's also, in hindsight, taught me how to get out of a situation like that, right? I had to budget hard. Yeah. I had to basically take a massive loss selling the car, handle the whole situation, right? And it was like, it taught me that if you have a plan, you can make anything happen.
Yeah. No, exactly. The plan is the most important part. Well, give me another one. Let's get another one.
So you're talking about cash. So I'm gonna hit you with this one. Is cash still a place to keep money during the rise of inflation right now, or should you be having assets or be investing in different ways?
It is not the only place. Again, we talked about it. I like cash. I like to have a little bit in the safe. I really do. I like to keep cash on me. I think there's times I just like having cash. It gives me the ability to be generous if I ever need to. I don't really give a lot of cash out to people. People on the side of the street. Typically, I'll go buy them lunch or something like that. But it just, it gives me the comfortability that, if something comes up, there's situations where I needed cash.
Yeah.
Go to the DMV. Guess what? They charge you money if you want to get them notarized. They only take cash. It's so dumb. They take card for everything else. But if you want a notary, $7 cash. And then you got to go over to their ATM and pay $4 to get $20 out.
Yep.
And it's just like, I keep a little bit of cash.
Yep.
But, it's not my, for rising inflation.
Gotcha.
Oh, we got a question. What's the best way to buy income? If you have $500K, you want to invest, what's going to get you the best ROI? That's a great question. That's a great question from Dylan. If I had 500,000 right now, and I wanted the best ROI, I would diversify it personally. I would find a couple different buckets to put it in. So maybe that's one bucket, that's heavily invested in the market. Maybe that's another one that's, in a more aggressive account or a conservative account, moderate. I want to have, different buckets. Like for all of our clients, I think about this. We if our client had, came to us with $500,000, we would have their money separated in different buckets. And the idea behind that is if one bucket is up and we have to go pull an RMD, that's your required minimum distribution, we could pull it out of that bucket that's up.
Okay.
Versus if we have it all in one place, let's just say the bucket of money is down.
Yeah.
Let's just say we're going through another COVID and it's down 20%. And
this,
then I go pull 5% out to live on. I just lowered that bucket 25% in 1 year, which is a total disaster.
and this is the whole bucket strategy you guys go through a lot. I mean, I've heard you guys talk about with your clients. I've seen it on a lot of these things. And from my understanding is you always have it where it's like a low, medium, high risk kind of concept with it. Is that the right understanding for it?
It's, it varies per client. Like at my age, almost all of my money is aggressively invested. But that's just because I don't plan on retiring for another, 40 years, 30 years. I might not ever retire.
Yeah.
With the business because, we own it. Like that's something I always want to be involved in. Versus if I worked, for a company, I would want to retire. I'm not going to go work for someone for my whole life.
Yeah.
I would want to retire. But I think when you're self-employed, it's a little bit different. But again, like as you get older, you have to think about that. Like, where should I put my money so that it works best for me? Because what works best for me does not work for someone who's 65 years old and on the verge of retirement.
And I assume there's a lot of different other strategies people can use on that level, right? It's probably the best thing is not to promote anything into the way, but it's finding a financial advisor, finding anything along those lines will help you a lot because they can answer a lot of those questions for you, right? They can give you the direction to at least understand what you should be doing with your money to invest it, especially if you're not sure, right? They can give you that level to hit it, understand it, and then you can go and try to start running it yourself.
And for people that are, more our age, maybe they can't afford a financial advisor yet, or they just don't think they need one. There's so much literature you can find online now about these topics.
Yeah.
To educate yourself. That's why we do this show. It's to educate people on how to get to that point where you can retire comfortably and feel comfortable. So
makes sense. And it's kind of leads into the other question too. So we just talked about 500,000 with it.
Yeah.
But what are the best first investments for somebody that just has like 500 or 1,000?
And we talked about this a little bit earlier, but that Roth IRA, after you've gotten your company match, if you have one in the 401, put it in a Roth.
What is there like particular company you would suggest to go to, or is it just kind of like
well, I mean, you can open a Roth with Fidelity or Schwab or Sophie. I think even has the option now. They've got some cool stuff. Robinhood, and if you can't invest in a Roth, if you're like in a similar situation to Max, where he's spent all that time in school and now the light of the tunnel is finally here, and he has that big paycheck. Throw it in a brokerage. Traditional IRA. There's plenty of options out there. You just got to educate yourself.
Yeah.
Got to educate yourself. And like I said, Fidelity, Charles Schwab, they all have literature on their website to explain these things way more in detail than we're going to be able to get today.
Yep. And they also have like, we talk about financial advisors and some people can't afford them with it. I know for Schwab particularly, they do have, when you go to open an account or you do go to work with them, they kind of will sit down with you and just discuss the options, discuss their things with you in general without costing you a dime. Yeah. Right. So there's not a negative side to just going to some of these banks and just be like, hey, I'm thinking about doing this. How should I do this? Or is there a benefit for me doing this? Yeah. And you need to make sure you pay attention for the sell because they're going to try to sell you to use their accounts, right? Yeah. It's the part of their job. Yeah. But they're also going to give you the information to like what you should be doing with it and how this could value you.
Yeah. Oh yeah. Well,
so it's always being prepared to handle the situations that arise.
Well, man, good show today.
Yeah. I think that
great
was
topics.
I think we hit anything. If anyone has any other questions or anything you want us to hit for us to cover next episode, please leave in the comments. Let us know. We'll love to be able to go through with it and figure out if there's any way we can help you more. We'll be happy to help.
Yeah, this has been awesome.
So
appreciate you.
Yep, it was a good one. We'll catch you all later.